Good evening and welcome. My name is Mark Kinney, and I'm the Senior Vice President of Government Relations at IPC. Today's webinar is the second in a series that addresses PPP loans, and tonight's program on loan forgiveness is being presented by Owen, Bondurant, and Rich Danhof of Independent RX Consulting. IRX Consulting specializes in peer counseling, accounting, and buying of pharmacies. The IRX team has a combined 100 years plus experience and together have owned more than 30 pharmacies. I will now turn the program over to Owen Bondurant.
Hello. Thank you everyone for being here tonight. This is Owen Bondurant. So we're going to go through a host of things today, primarily focusing on forgiveness and what you need to do for the PPP dollars that you've received for forgiveness. We're going to spend most of the time on that and what you should be doing to prepare to submit your forgiveness applications. At the end, we're also going to touch on HHS payments that many pharmacies have been receiving from both Medicare and Medicaid. We're getting a lot of questions about what are they, why am I getting them, should I accept them, et cetera, and we're going to spend a little bit of time on that. And then lastly, we will be talking through the current rules around EIDL loans and what you can and can't do there. We're going to go through a lot of information here. If you watched our first webinar, you'll see that the rules have drastically changed from 2 months ago when we did the first webinar. And I can tell you this much, you need to pay very close attention to all of this because we're hearing that there's going to be further changes over the coming weeks once they close down the PPP loans. And so some of this stuff is in transition and will change. Luckily, we are hearing that most of those changes should be a positive thing, but keep in mind that some of this stuff will change. So let's start out with a summary here.
Yeah, this is Rich. I'm a CPA and work here at IRX and own stores, and so kind of head up our accounting side of the business. And so, as Owen said, we previously had a webinar where we talked about, hey, every pharmacy out there should be going out and getting applying for these EIDLs potentially and PPP loans. And so many, if not most, everybody, all the pharmacies, independent pharmacies in the country basically went out and applied at least for the PPP side of the loans. And the PPP program was funded initially and then refunded. And so it has been given adequate dollars to fund a significant amount of loans. As a matter of fact, there's still dollars out there available. So if you know pharmacies that have not gone after PPP money, they still have an opportunity to go get those loans through next week, basically through the end of June 30th. So there are still dollars available, which is kind of surprising, but those dollars are available, and those PPP loans are out there. And again, those are paycheck protection programs. So basically what they're asking for is they want the businesses to keep people employed. So instead of them going unemployed and going to the government for funding, the government is giving us small businesses dollars to protect those paychecks and to keep those people employed. And that's what the PPP program is all about. And an element of the PPP program, which is the most appealing element, is that at the end of the day, if that's what we use our dollars for around some stipulations, the government will come back and potentially forgive those loans and basically give you those dollars to keep those people employed. And so most of what we're going to talk about today is around that forgiveness feature of the PPP loans. Secondly, there was EIDL or EIDL loans that were out there. Those are true loans. Those loans were disaster loans. They've existed for a long period of time, so this isn't nothing new, but they ramped up the program during this COVID crisis. So if you were applying, and those are true loans, there's no forgiveness features to the EIDLs. They are loans that are have terms of 30 years and 3.75%, which is not a loan you could go out in the marketplace and get from a commercial bank. So they have very favorable terms. You apply for them through the SBA, and it is directly through the SBA, whereas the PPP program is all through the banks. And as you apply for the EIDLs, you could also request a grant, and they would look at your head count, and they could give you up to $10,000 of an EIDL grant. So some of you got, a piece of an EIDL grant, and you got an economic injury disaster loan, and you got PPP money. And so we're going to kind of step through those a little bit on the forgiveness side. The last piece that has come out, and Owen alluded to a little bit earlier, is HHS has come out and made funds available to people that were billing both Medicare, and now a second wave to people billing Medicaid. And those dollars, so the amount that you were billing to those, to Medicare, your percentage, you possibly saw a deposit directly into your bank account from Medicare, and then you had to go and fill out a release form, basically saying that I received these monies and that I had billed Medicare for them. So we'll go back to those, but those are the kind of the four areas where you may have received dollars, and we're going to talk about those in a little more depth. So first thing we're going to step through is kind of a timeline of events. So, PPP initially got started, and we saw the first loans were probably getting funded in early to mid-April. So people started getting money in early to mid-April. And as you know, there's a covered period that is, so when you applied for a PPP loan, you applied based on payroll from 2019, and it was based on 2.5 months. And so that's how they awarded PPP dollars, was based on 2.5 months of average payroll for your business from 2019. Now, forgiveness is based on, so 2.5 months is typically about 10 weeks, right? So forgiveness was initially based upon an 8-week period. So you're trying to get 10 weeks of dollars forgiven in 8 weeks. And so that made things a little tight. Now, they added some other things to the forgiveness that you could get forgiveness for spending not just on payroll, but also on rent and other things. So, so there were no rules really released by the SBA around forgiveness until almost mid-May. And so you can see people that got funded in early April started getting an idea of how the forgiveness was going to be run a month into their 8-week period. So they were 4 weeks into their 8-week period before they first started getting an idea. And that was based on an 8-week covered period, which is what the initial documentation said. So as Congress and as they went through that, they came back, and on June 5th, they came back with the Paycheck Protection Flexibility Act of 2020. And that changed everything. And for the most part, it changed it for the positive. Because and then within the next couple of days, in the next couple of weeks, they released more interim rules. They released the actual applications. And there were several changes that were made and concessions that were made in the Paycheck Protection Flexibility Act. So what changed? So these are the key ones. The first thing that changed, and the most notable one, is that instead of an 8-week covered period to spend your proceeds from your PPP loan, you now got 24 weeks covered period. So now we're not scrambling to figure out how to cover 10 weeks of payroll in 8 weeks, right? Now you've got 24 weeks. Everybody should be able to cover their PPP loan with a 24-week covered period. That was good news, obviously, and that was the biggest change. But there's always stipulations around that. So we've got some other. So one of the other stipulations was that 75% in the initial agreement, 75% of what you spent had to be spent on payroll. So the other 25 could be things such as utilities, rents, and mortgages, mortgage interest. So what did they do? On top of moving it from an 8-week covered period to a 24-week period, they also relaxed that rule and moved it from 75% to 60% spent on payroll to achieve full forgiveness. So another big positive, because so at this point, almost everybody that got PPP dollars based on those two changes alone should achieve full forgiveness. What they did do they did put one cap in there. So owner's compensation is capped at $20,833 for the 24-week covered period. And so that is basically the 2.5 months of $100,000 salary. So remember, when you applied, you couldn't get funding for any salaries over $100,000. They capped all salaries at $100,000 or less. So they did cap the owner's compensation at $20,833 for the 24-week period. So if you took $100,000 and you took 24 weeks of $100,000, that's really $46,000 that by normal calculations you'd be able to deduct. But they went back and capped it at the 2.5 month period where you originally applied for it. So that was one of the changes. They also excluded health insurance premiums paid for owners. So those are no longer forgivable, and they were forgivable in the initial document, but those are no longer counted as forgivable payroll expenses. So those two things are going the other direction, but with the 24 weeks and the 60%, it more than made up for those changes going in the other direction. A few more things changed. So, and this was a good one. So previously the maturity date for unforgiven amount. So if there was any amount of the loan that was unforgiven, it turned into an actual loan back to the government that you had to pay on a monthly basis. And initially that was over 18 months. Then it became 2 years, and that number still sits at 2 years and at 1%. But at the discretion of the lender, so whoever you got the PPP loan through, they could extend that all the way out to 5 years. So if you got a $100,000 loan and for whatever reason you didn't qualify to get full forgiveness on that loan, so let's say you got forgiveness on $80,000 out of that $100,000, that $20,000 remaining will turn into a note payable back to the government, to the SBA, but that could be extended at 1% interest rate out to 5 years. So still a pretty cheap source of money to make sure that your pharmacy is healthy and it has the cash flow that it needs to operate. So in addition, the employers can defer their portion of the Social Security tax until the end, 50% to the end of 2021, and another 50% to the end of 2022. Even if you receive PPP, that's an adjustment. They did come back and say that expenses paid with forgiveness dollars would not be allowable deductions. So what that basically means from a tax standpoint is if you got that $100,000 and let's say all $100,000 of your PPP loan was forgiven, now they're not making you add revenue and record revenue and report that as revenue on your tax return, but the dollars were spent on payroll and the dollars were spent on rent and the dollars were spent on utilities. So those things that added up to the $100,000 of forgiveness, you are not allowed to include those as deductible expenses on your 2020 tax return, if that makes sense. So basically, they're not going to allow you to pay payroll with free dollars from the government and also get a tax deduction for it. So you got to be aware that your expenses in 2020 are going to be lower than they probably were the year before, because you got several weeks of payroll paid for on your behalf. And so your expenses will be less, your taxable income could be higher. So you need to be aware of that and plan for that. And then the last thing that changed, and there were also some other minor changes, but these are the big ones. The last thing is that they came out with an EZ form, and that is an attempt to create a quick and easy way to apply and get through the forgiveness process. Because you got to realize, I mean, there are hundreds of thousands of these loans out there at different banks, and these banks were overwhelmed trying to get the loans out the door. Now, with the requirements around forgiveness, the banks are going to be overwhelmed trying to get through the forgiveness process as these PPP periods cover periods conclude, and they go through the forgiveness process. So the EZ form, what is it? Well, it's exactly that. It's supposed to be easy. It's supposed to be quick. Supposedly 20 minutes, 25 minutes to complete it. And in order to do the EZ form, you have to be able to answer yes to one of 3 questions. So if you answer yes to any of these next 3 questions, you can fill out the EZ form. And believe me, if you can fill out the EZ form, that is a much better process than trying to fill out the regular 3508 form. So, but don't forget, even though you're filling out the EZ form, you still have to provide documentation behind some of the numbers. So you are going to have documentation, and quite a bit of documentation, to support what you're populating these forms with. So those 3 questions. The first question, are you self-employed, and if you have no employees? So if it's basically just you and you're in business, you can do the EZ form. That doesn't cover most of us. Most of us have employees, so most of us can't answer yes to that one. The second one, there are 2 criteria in the second question. So the first is, and if you can answer yes to both of these, then you can answer yes to number 2, and you can fill out the EZ form. First is, you did not reduce any salaries or pay by more than 25%. Okay, so, and I don't think that was a big thing in pharmacy. I don't think we saw a lot of pharmacies that were going out and slashing pay rates and salaries, and so usually that's not going to come into play in our particular industry and in pharmacy. But the second one is the challenging one, right? And it is, you did not reduce hours worked by employees. So, and there are some dates out there that you have to use to compare, and we'll get into this FTE rule in a little bit in more detail. But if you have the same employees that you had when you started, and you didn't cut their hours, and you kept them on, and they stayed with you, and nobody left, whether on their own or then you're fine, and you can fill out the EZ form, and you should have no problem getting forgiveness, because you got 24 weeks to cover 10 weeks of payroll. So that would be best case scenario. There are some exceptions that if your headcount did go down, but that was due to certain circumstances, or you were unable to hire qualified candidates because in some cases they were making more money sitting on unemployment than they would be if they came back to work, or they were afraid to come work in a pharmacy because of the exposure and the risks, or they were of such an age that they didn't want to. So there were reasons, there can be exceptions to if your employees did decrease, but it was due to one of these exceptions, then you could still answer yes to that question and fill out the EZ form. So, and then the last question, which you could answer yes to and fill out the EZ form. And again, it only has to be a yes answer to one of these 3 questions. This one is not typically what we see in pharmacy either. This is one where, again, you have to answer yes to both of these sub-questions. The first is the same as the previous one. You did not reduce any salaries or pay by more than 25%. We already talked about that one. But the second one is basically that you were unable to operate during the covered period at the same level of business due to shelter-in-place laws. And most of that did not, because pharmacies were so essential. You know, I'm not aware of any pharmacies that were forced to basically close their doors and not operate. So that one usually doesn't apply to pharmacy. So in summary, you know, what we have to, when you do apply and you can answer yes to one of those previous questions, we can go through the easy form, and it's pretty quick and easy. It's basic information. You do have to choose what period, covered period you're going to use. Are you going to use an 8-week period, which is 56 days, or are you going to use a 24-week period, which is 168 days? So there may be some reasons that you want to use and close out the 8-week period very quickly. However, there's so much uncertainty right now about what these final rules and regulations around this are. We think they're probably going to change. Could they change for the worse? I guess they could, but they could also change for the better. Right now, when we've talked to the banks aren't even accepting any applications for forgiveness until probably the second week of June. So you couldn't, or of July, you couldn't apply now for forgiveness. The bank wouldn't accept your application now, even if you tried to put it in. But when you do that, you will have to select a period in which you're going to apply for forgiveness for your covered period. Was it an 8-week period or a 24-week period? Your 168-day period cannot extend beyond 12/31/20. So if somehow you don't get funding until after mid-July, that's the only way you'd run into that 12/31 deadline date. So it may shorten your 168-day period. I don't think that that's going to apply to too many. There also is a confusing line there that says, okay, do you want to use an alternative covered period besides the normal covered period? Normally, the covered period would begin on the first date that you actually received funding. So the day that they put money into your bank account begins your covered period, and then you'd add 168 days to that, and that would be the end of your covered period. However, they've also offered up an alternative covered period. It doesn't differ that much from the first. It just begins on the first day of a new payroll period after you get funded, if that makes sense. So if you get funded on a Wednesday and your new payroll period begins the next Monday, you can wait until the next Monday to begin your 168-day period, beginning exactly on the first day of a new payroll period. So, and then the last thing, and this is not minor, there is a whole page of representation and certifications. So you do need to read those carefully, answer them truthfully. They, again, go back and refer back to you're attesting that you did not reduce payroll, you did not reduce headcount, that you that you have all the documentation, that this is not fraudulent, those types of things. But those are serious, and you need to make sure that, and you'll have to complete the representation and certifications. But for the most part, it's pretty quick and easy. So the problem and the challenge, I guess, not necessarily the problem, but the challenge becomes if you do not qualify and you cannot answer yes to one of those 3 questions. So now you're kicked out of the easy form and you have to fill out the full form, the 3508. And basically, it just requires significantly more detail and documentation. And instead of taking you 20 minutes, it's going to take several hours to kind of pull the type of information that they're requiring to complete this form. So there's a lot more questions, and a lot of it centers around, your head count, because again, the goal was to keep all these people employed at the same level of employment that they were prior to the crisis. And so if that did not occur, then there are some guidelines around that may reduce your forgiveness, the amount that that is forgiven, and it turns it into a loan. So this full form 3508, it's got a schedule to it. It's got 2 tables where you've got to list out every employee in your company. You've got to determine full-time equivalent headcount for each employee over the entire covered period. So it is a bit of work, and but it may be necessary for a few of us.
So how do we calculate forgiveness? Well, first off, we provided an easy calculator, this link. This is a great form that you can fill out, and it can do some calculations for you to determine what your forgiveness amount is. And we find it to be pretty easy and simple to fill out, and helps you do some of this calculation without having to get an Excel spreadsheet out to figure it out. But the form itself, both the full form and the easy form, is going to ask for a few things. The first thing it asks for is payroll costs. And by payroll costs, what they mean by that is gross salaries, gross wages, tips, commissions that you paid, and paid leave. And that paid leave could be vacation, family time, medical, or sick leave. However, it does not include leave that was covered by the Families First Coronavirus Act. So if you had, and this could apply to a lot of pharmacies, because we've seen a good amount of pharmacies have employees that contracted and got the coronavirus, and they've taken time off. If they got paid under this act, it cannot be counted towards this payroll cost. And then within that payroll cost, so then the next thing that's out there, so it's your basic wages. So if you have a technician, it's going to be their salary, it's going to be their, any kind of vacation they took, et cetera. If you've got pharmacists that are more expensive, you can only include $100,000 worth of their salary. So for an 8-week period, that would be $15,385. For a 24-week period, that'd be $46,154. Which is why that 24-week period allows a lot of pharmacies to reach their forgiveness, because that is a lot of money. But keep in mind, this does not include you as an owner. So this has to be a staff pharmacist. It cannot be you as the owner, because as we talked earlier, you're capped at 2.5 months. Then within the payroll cost, they also have a section that will be lumped into the payroll cost of employee benefits. And employee benefits, what they mean by that is employer contributions to health insurance, including self-insured plans, but it excludes pre-tax and after-tax contributions by the employee. So this is your contributions, not the employees. It also includes contributions by you, the employee, contributions to you, by you, the employer, to retirement plans. But again, it's excluding pre-tax and after-tax contribution by the employees. And then again, coming back to being an owner, it does not include contributions by self-employed or general partners on behalf of owner employees and that are capped at 2.5 months of the 2019 amount. So you can count employee contributions that you made for employees, but not for yourself. Employer state and local taxes are also included in this. So things like state unemployment, for example, can go towards this. So those taxes that you are paying for the state and local will be included in your payroll calculation. And then I mentioned the owner's compensation, that you're capped at 20,000, so you can't just extend out to 46,000 like you would on a staff pharmacist. So when you take all those things, the payroll costs, the employee benefits, the taxes, that's going to be line one, which is their payroll cost. The next thing that they're going to ask for is either or both mortgage interest. So this would include payments that are made or incurred during the covered period. So if you choose 8 weeks, it's payments made during or incurred during the 8 weeks. If you include 24 weeks, it is payments or payments that were made or incurred during that 24 weeks. This can also apply to real and personal property, so other things you may be paying interest on. But the rules on that have still not been real defined. They're being a little bit general. So this may include things that are outside of just a mortgage. And so keep a look at that because they're going to release more rules on that particular item. If you don't have a mortgage, they also can include rent. This would include, again, payments that are made during your covered period or incurred during that covered period. And then you can include utilities as well. So things such as phone, internet, electric, et cetera, can be included onto this. So they have one for payroll costs, one for mortgage interest, one for rent, one for utilities. Then, if you received an EIDL advance, not a loan, but the advance, the $10,000 grant up to $10,000, that will be deducted from your forgiveness amount remitted to the lender. So you'll put in that number as actually a negative to the forgiveness.
So all those items are the details of all the items that are includable as expenses that you can use to offset the PPP amount and seek forgiveness. Again, you don't have to use each of those categories and list out each of those items if you don't choose. I mean, if you're looking to deduct, just use your payroll. Your payroll in 24 weeks is clearly going to cover the PPP loan that you got based on 2.5 months. So, but those are the allowable expenses if you were to so choose to use each and every one of those categories. So what you submit is up to you, and you just have documentation behind it. So I'm going to talk a little bit about the FTE because I think this is going to be the biggest hang-up. It is going to be the one thing that has happened in our stores that is going to cause us the most confusion. It is the most confusing piece of the calculation. It is the most controversial probably. People are frustrated with this because there are so many unique circumstances that are happening in our stores. As we know, payroll and people are both our biggest asset, but also our most complicated and challenging piece of kind of running our pharmacy is keeping all our people. So especially in these environments. So there is, you know, again, back to the whole premise of the PPP, it was to keep these people employed. So they want to make sure your FTEs or that your headcount did not drop, that you, if you're going to get forgiveness, they want to make sure that you kept those employees employed. So that's what it's all about. So we're going to step through this. This stuff is not fully understood yet. The banks don't understand it, and they're the ones that have to totally, you know, assess it when you submit your application for forgiveness. They're the ones that are going to look at it and make judgment on it, but they need more guidance. So we still need more guidance on this. This could change, but this is such a big piece of it, and this is the biggest one that we get tons of questions on. So we're going to try to at least walk through what we do know. So when you flip over to the full form, in the full form, there are 3 questions there. And if you can answer yes to any of these 3 questions, you can avoid an FTE calculation. So the first question, and again, it's yes to any one of these 3 questions. The first question, which I'm not sure I totally understand, because if you answer yes to this one, you probably would have been filling out the EZ form. But this one says no reduction in employees or average paid hours. So if you didn't reduce your employees or average paid hours, you don't have to worry about an FTE reduction calculation. So you should probably be filling out the EZ form anyways at that point. Second is safe harbor number 1. And this is similar to what we saw earlier, and this probably doesn't apply to most of our pharmacies, that the safe harbor number one is that you were unable to operate your store due to your local government or your state government's, shutdown or restrictions that were placed upon you. So mostly that doesn't apply to pharmacies, so we probably can't answer yes to that one. So that puts us into number 3, which is safe harbor number 2. And of course, this is a calculation, and this form works like a typical tax form. It's confusing. There's numbers moving from lines to lines and deductions, and so there's calculations involved. So this safe harbor number 2, if you qualify for safe harbor number 2, it will prevent you from reducing your forgiveness, but there is an FTE calculation that's required. And what safe harbor number 2 is basically saying is that if you had employees, and it gives you a very specific date, start date at February 15th of 2020, how many employees did you have in February 15th of 2020? And then for the next 2 months or 2.5 months after February 15th, what was your average headcount during that period? And if after February 15th, if your headcount did drop, then you have an opportunity to get relief under safe harbor number 2. But the way that would work is that when you submit this form, you have to have hired back your headcount to be equal to what they were at February 15th. So if your headcount was 15 at February 15th, and then it dropped to 12 in the next couple months when the virus hit and your stores slowed down and doctors weren't writing scripts, and your headcount dropped to 12, now you've got yourself a problem, right? Your FTEs have dropped, and so you're in this potential to lose forgiveness. So now you've got 12, you're supposed to be at 15, but you can rectify that. So either at the date of filing of this forgiveness form, which would be the close of your period, or December 31st, you can go back and hire back those 3 headcount. So if you get it back to 15, even though you dropped for a period, if you bring it back up to the 15, then you qualify under safe harbor number 2 to avoid a FTE reduction. So those are the 3 ways to avoid an FTE reduction calculation, is to not reduce hours, to if you were shut down by the government, you had no control over it, or if you lost headcount, but you restored it by the time you filed this forgiveness. So if you cannot answer yes to any one of these 3 questions, you're going to go into the calculation. So we're going to throw some quick calculations out here just to show you. So first of all, let's define what an FTE is. It's a full-time equivalent. So that means if you've got 2 part-times, they may equal a full-time equivalent. How many employees did you have? So, and there's 2 different ways you can calculate your FTE, of course, so they make that complicated. And the first way is that you can take the average hours worked and divide by 40. So assuming that 40 is a normal week, so how many hours did your employee work during a typical week? Divide that by 40, and then round to the nearest tenth. So there's an example there. If we had 30 hours, if you worked 30 hours, divided by 40 is 0.75. Round to the nearest tenth, that's 0.8. So you have 0.8 of an FTE. You don't have a full FTE, you have 0.8. Or you can use the simpler method, which would say average hours worked. If they are 40 or over, you can count them as 1 FTE. If the average hours worked is anything less than 40, you can count them as a half FTE. So obviously you're going to have to look at, your employees. If you are looking to get your FTEs up and you have a whole bunch of employees that work maybe they're high school kids, they work 5 hours a week. Well, the second method would allow you to count that 5-hour-a-week employee as 0.5 FTE. So that might be more advantageous to use that method. But whichever method you choose, you have to use it for both ends of the equation, right? For the initial, what is my FTE starting point and what is my FTE finishing point? So you can't switch between methods. You have to choose one of those two methods to calculate an FTE. And then now, here's the actual calculation that we're all trying to avoid having to actually complete. So this says, what is the average FTE during the covered period? So that is, currently that could be your 168 days, that could be your 8 weeks, your 56 days, divided by what is the average FTE during the reference period that you choose. And so what is the reference period? They gave you a choice. You can choose either February 15th of 2019 through June 30th of 2019. So you'd have to take all your employees for that period of time and average them out and figure out what their average hours worked per week were, convert that into an FTE, and that's how you'd calculate it. Or you could use the period from January 1st, 2020, so the beginning of this year, through the end of February of this year, so the 2 months at the beginning of this year. So obviously you want your reference period to be the smallest number possible. So if you had less employees January 1, 2020 to February 29, 2020, you'd use that as your denominator. Or if you go back to 2019 and that produces a smaller number, you'd use that. So what they're looking for is, the average period, the average FTEs during the covered period. If that is lower, and if you've gotten to this point, it probably is. So if that is lower than the average FTEs during the reference period, then you're going to come up with some portion of your loan unforgiven. So the example down there says if you had 14.5 FTEs during the covered period, and you had 15 FTEs during the reference period. So basically you lost a half a head count, maybe a part-timer during that period because you had to let them go because you didn't have enough business. Well, that creates a ratio of 0.96, or in other words, now you've lost 4% of the PPP amount was lost for forgiveness, was not allowed for forgiveness. So, if that number was 12 FTEs during the covered period over 15 FTEs during the reference period, you just lost 20% of forgiveness. So that's kind of how the calculation is going to work. There is, in talking to some of the banks, it's not real clear in the documentation right now, but in talking to the banks and what we're starting to see, and I think what came out today said that your covered period does not necessarily have to last the full 168 days. And this is important because it really shouldn't take you 24 weeks to come up with enough payroll to forgive 2.5 months or 10 weeks worth of payroll that you got paid, right? So if you can get that covered in 10 weeks or 11 weeks or 12 weeks or 13 weeks, and you can cut that off and finish it at that point and not wait out the 24 weeks, because as soon as you apply and get the forgiveness moving and end your period essentially, then you can kind of get on to business as usual, right? And now you can start making headcount and payroll decisions as you need to make those payroll decisions to run your store the way you run your store. So there's definitely a motivation to get this done, get it behind us, figure out exactly what your forgiveness amount is going to be, figure out if you're going to have a loan amount at the end. So I do believe that that'll be in the final documentation and guidance, that you'll be allowed to end your period early and apply for forgiveness.
Okay, so with all that being said, what should you be doing now? As Rich said, we are expecting some real defined information on this after the loan time closes on June 30th. So a lot of what we're going to concentrate around here is the documentation. So you've got to document every single dollar that you spend. And even when you fill out this easy form, if you do the easy form, it's short and to the point, but they require attachments to that. So a lot of what you need to be doing now is making sure that you're gathering all these documents. So for example, if you're for payroll, they are going to want to see either bank statements or third-party service provider reports documenting the amount of cash compensation paid to the employees. So not only do they want you to report how much you paid, but they want to see that you actually paid it. They're going to require quarterly business and individual employee wage reporting. So for example, if you include an unemployment insurance tax as part of your forgiveness, you need to show that that was paid and that was part of what you paid. For employer, same goes with employer contributions to health insurance and retirement accounts. If you make that part of your forgiveness and report as part of your payroll costs, those two items, you need to show that you have paid it and that you have an active account statement for that. Getting into rent and mortgage interest. They're going to want to see that you paid the mortgage interest, and they're going to want to see potentially the statements that you have a mortgage. For rent, they're wanting to see the lease agreement showing that it was in place as of February 2020. Then they're going to want to also see receipts or a check showing that you paid the rent. So if you didn't pay the rent, it doesn't get to count. Now, back to Rich's point, if you're going to do 24 weeks, you may just do this on payroll, and you may only have to gather the payroll specific items and just make rent zero. But if you're going to include rent and payroll costs and utilities, you need to document not only that you paid it, but they want to see copies of the statements or the invoices. So it's important because if you look at this over, let's say, a 13-week period, well, you may have 3-4 rent payments. You could have several payrolls. So you're going to have to document every single one of those. And that could take a little bit of time for you to gather it. So this is coming. So you should start just gathering all this information because you're going to have to scan it in and provide it to the bank. The last thing that you should be talking is just speaking with your bank and your CPA. The bank in particular, ultimately, they're the ones who are going to rule on the forgiveness and making sure you're understanding how they're interpreting the forgiveness rules. It can get a little difficult if you've gone through a larger bank like Chase or Bank of America, because they are going to just keep shifting it off and saying, hey, send this stuff in. But I highly encourage you to go try to find a loan officer, sit down with them and really understand how they're interpreting the SBA's rules if you can, so that you can provide the information that they need in order to give you the forgiveness. And then one thing that's not on here, because we touched on it, is the whole FTEs. You really need to look at if you've let employees go or if you've had employees leave and you haven't replaced them. Do you bring those employees back before the end of your covered period? And you got to make some decisions on that. That being said, hopefully in the next 7 to 8 days, we're going to have very specific information around that FTE, and you'll be able to make a better decision around what you need to do with that FTE information.
I will say and add to that, Owen, in our conversations with the bankers, first of all, they're not saying a whole heck of a lot right now because, again, there's so much confusion. They're actually telling people to go to their CPAs and their accountants, and so that's a little frustrating because I'm like, you guys are the ones that are going to ultimately pass judgment on, whether this loan is forgiven or not. So you should be telling us how you're going to interpret this. But what they did say, and these were smaller, more specific banks to pharmacy, so lenders within pharmacy that we typically work with. Both of them, or well, all three said to me, we want you to achieve full forgiveness. That is our goal. This is not like filing a tax return where you put some numbers on a piece of paper, you send it in, and that's it. You know, you're either going to win or lose. This is a collaborative effort by the banks to work with you. So if you're missing documentation, if you filled something out or did math incorrectly, you know, they should work with you to make sure that you've documented properly and gotten the maximum amount of forgiveness you can possibly give. That is their goal. So you know, you don't have to go into this feeling like, man, I'm going to submit this thing, and if I've got one thing wrong, they're going to reject the whole thing and I'm not going to get forgiveness. That's not what we're hearing from the banks. We're hearing that they're going to work with you. And so if you've got unique circumstances, if you've got an employee that retired on their own volition during the period because they were, or they felt that they were susceptible and vulnerable if they had a medical condition and so they chose to step down, we need to document those things and include those in our descriptions and give that information to the bank so that they can take that into consideration as to why your FTEs dropped. And so they said that they're more than willing to do that, and that's part of the process.
Okay, so that was primarily all the PPP forgiveness. We're going to spend just a few minutes on HHS payments and EIDL. So a lot of pharmacies have received one of two payments from HHS, and what you'll get is a direct deposit that says HHS CARES Act. The first round occurred probably about a month ago, and it was for Medicare Part B billings of medical equipment and supplies. So if you were billing medical equipment or items like diabetic test strips, nebulizer supplies, things like that you billed to Medicare Part B, they were paying you a % of what you bill over the course of a year, and you just received a random deposit. Most of these deposits were small. Most pharmacies got $1,000, $2,000 at most. There was a follow-up email that came, and we'll touch that on in a second, that you had to fill out in order to keep those dollars. There is a second round of dollars that are being released as we speak. So we've had a couple pharmacies that are clients receive these dollars in the last couple of days. So there was the original round, which was $175 billion. The second round is $15 billion, and it is specifically allocated to those providing Medicaid services on the front lines of the coronavirus. It is a little confusing because when you read all the things, they never mention pharmacy in anything. But pharmacies are receiving dollars and are part of this plan. We've had a couple of clients already receive those dollars. And so, and what they're saying is that basically they're giving you about 2 months worth of Medicaid billings. And it's not just for medical equipment and supplies, it's for regular prescriptions and pharmaceuticals. So what's happening there, both with Medicare Part B payments and the Medicaid payments. So with Medicare Part B, you received dollars and then you got an email and it had 2 portal links. There was an attestation portal and there was a general distribution portal. And you had to log into both of those and accept there was about 10 questions for each thing that you had to accept and sign off on, and then you could keep those dollars. Now, I will say you had 90 days to sign into that. If you do not sign into it, they will claw back the dollars. They will take them back. Medicaid, the Medicaid payments, we're seeing a couple of differing stories. We've got clients who just received a random payment and have not yet received the email. It's the same email that the Medicare Part B one had. It's two different links. There's an attestation and there's a general distribution portal, okay? And again, you have to fill those out and accept them or they will claw the dollars back. However, some of the clients got the email first, had to fill it out, and then received the dollars. So I'm not really sure which way that's going. On both of these, however, I do want to provide a little bit of caution. There is a lot of rules about how you can use these dollars. It's not like they just hand you, hey, here's 10 grand, and you can use it however you feel like. Things like, for example, you can't use it for dollars that you also used other Coronavirus Act dollars for. So you can't pay payroll with these dollars and pay PPP dollars. HHS is doing a webinar on all of this on Thursday. We've provided a link here, and they're going to detail how you can use those dollars. But there is some specific rules. So before you accept, in particular, those Medicaid payments, because some of them are getting pretty large, you would want to really understand these rules. But if you follow the rules, you do get to keep the payments and you do not have to pay it back.
So the last real piece we're going to go over are the EIDL or EIDL loans. Again, these are loans. They've been in place with the SBA for a long period of time. They covered, hurricanes and earthquakes and a lot of different other disasters. And so they just accelerated the program and kind of utilized the program during this pandemic. So if you did get PPP money, you are also allowed to have an EIDL loan. And so again, the PPPs went through the banks. The EIDL goes directly through the SBA, and you go to the SBA website and you can apply for those loans. They did, for a period of time after there were initial batch of stores that applied for them and have gotten funded for them. Then they cut off funding for EIDL. The SBA was overwhelmed with applications, so they stopped funding EIDL loans. That has started back up, and they are accepting new applications now, again, as of June 15th. So if you did not apply for an EIDL loan and you would like an EIDL loan, you can go apply for an EIDL loan. Those are not as simple as PPP. They do go through underwriting. They do run a credit check. There are a number of things that they do in getting you eligibility for the EIDL loans. However, they're not collateralized. There's a number of things that are also beneficial to them. So they cap those dollars at about $150,000. So that's the max EIDL that you can get. Again, it is not a grant, or there is no forgiveness on this particular loan. This is a loan, but it is over 30 years. So it's amortized over a 30-year life, and it's got a 3.75% interest rate. So again, that's by far better than any commercial loan that you could go get in the marketplace today. A typical SBA loan would be a 10-year note with maybe a 7 or 7.5% interest rate. So that is a far better set of terms. And then the payments on the EIDLs can be deferred up to 1 year, but during that time that you're not making payments, interest is accruing on the note. So the note value is going up during that period of time. So also the use of funds for EIDL. So there are different ways that you can use the EIDL funds. You cannot overlap and say, I use these for the same things that you use the PPP. So that's one advantage of getting the PPP done and out of the way. And then you can use the EIDL funds after you've done your payroll calculations and got your forgiveness or established your PPP loan. But it could be payroll, it could be fixed debt, rent, utilities, those things that we're getting PPP money, but not for the same period, not during the covered period. Don't use your EIDL loans to cover those costs during the covered period of PPP loans. we would recommend in that accounts payable number, or that accounts payable category down there, we would recommend if you get a EIDL loan that you go ahead and use those dollars to pay your wholesale bill, right? So 150, for a decent sized store is going to be one or two payments to your wholesaler, and then it's completely used. And that is a legitimate source. You want to use these EIDL funds on current operational types of things, right? Because that's what they're trying to do, is keep you in business during this crisis. So you don't want to go retire other debt. You don't want to, buy delivery cars. You don't want to go build a USP 800 compliant room with it. You want to pay current types of expenses. And again, payroll is being covered by PPP, so the easiest thing to grab with that 150, or if you get 70 or 100, whatever you get, pay your wholesaler with those dollars. And then that'll consume those dollars. And by not using your typical funds to pay your wholesaler out of your regular cash account, you're using your EIDL funds, you are now building up cash in your regular cash account, right? So after you've completed your PPP and your forgiveness, you've used up your EIDL to pay your wholesaler. Now there should be additional cash that wouldn't have been there otherwise in your cash account. After all those other things are done, go use that money to build your USP 800 room if you're a compounder. Go use that to do a remodel or buy an asset. Go retire other debt that may be at a much higher percentage rate. So, but wait and use the PPP correctly, get the forgiveness, use the EIDL correctly so that they don't come back and say you used it improperly and require it all back. So just pay your wholesaler bill with those EIDL dollars, and then you can kind of move forward. So again, we listed a few other ineligible uses of the funds, but again, those are all longer term. You don't want to dividend or give yourself bonuses on that money or refinance other debt. Pay current operating types of expenses like we suggested. So that's kind of it for the EIDL.
Yeah. So at this point, we're just going to, I see there's some questions that have come in, so we're going to try to capture some of these questions. We can't answer all of them. So we're going to try to answer some of the common ones. Certainly, if you have other questions, you can submit it to us or to IPC reps, and they can forward it on to us, and we'll try to answer your questions. There was a few in there. Is this going to be recorded? Yes, it was recorded, and it will be available on the IPC website, ipcrx.com, if you want to reach out and get it again.
And you can feel free to give us a call, and we can talk you through specific stuff. So yeah, I think there's a link to us on the website. So
there was a couple questions about if you hired extra employees and actually gained employees, will that impact you?
Yeah, it'll keep you from having to, it'll get you 100% forgiveness as long as you keep, if because those employee numbers will be higher than they were pre-period, and that's what the government wants. So that'll get you 100% forgiveness if you've gone ahead and hired more people and upped your head count. That's nothing but positive to you. Will the 1% interest on not forgiven amount accrue from the date PPP amount was credited to the account or from the date the forgiveness? I believe it's from the forgiveness. I think once you go through the forgiveness calculation, your loan will establish, and then that's when the 1%, I believe, starts to accrue. So it doesn't go all the way back to the period in which you were first funded, I don't believe. So again, some of that is very specific, and we don't have all those real specific answers. They really rushed this out, and with good intentions, right? So it was, but when you rush things out and it's such a huge program, there's gonna be a million different scenarios and loopholes and questions, and they don't have them all answered yet. some of these more complicated FTEs, again, feel free to call us and we can potentially talk you through. But I will say the best thing to do probably is to sit tight for about a week. And let's see, we walked you through those complicated examples, and I know people are worried and they're wondering, well, I know that my FTEs went down. Should I go hire somebody today so that I have so that I can get my FTEs up? I'd be patient about another week, a week and a half, and let's see what happens. There's a lot of speculation as to,
even in particular around FTE.
Even to the extent of, and I'll throw this out there, but even to the extent of, could they pick a dollar amount and say that anything below that dollar amount doesn't need to go through this forgiveness process? That could happen. There's no, that could be a small dollar amount, it could be a large dollar amount. That could happen. So let's wait another couple weeks and see what kind of guidance comes out. So what we do know is we'll get something more specific than we've got right now to work with. But we thought we'd go through those examples just to show you that the way it sits now, I mean, that FTE is probably going to be the one thing that hangs us up a little bit as pharmacy owners.
And if you have more complicated, there's some complicated FTE questions that came in, please call us because those are individualized to each one of your stores. There was a question about, was there a cap on anyone over 100K, not just the owner? Yes, there is a cap on 100,000. You can only pay up to $100,000 during the covered period. So for 8 weeks, that's like $15,000 and some change. For 24 weeks, that is $46,000 and some change. So you can only pay them up to if that person makes 150, you can only use PPP dollars for the $100,000 portion in any given pay period.
Yeah, so what they're looking at when they're looking at $100,000, you're really looking at, if there's 100,000, so you're looking at $1,923 a week of pay is what they'll cap it out. So if that person's making 150, you're going to be limited to $1,923 a week for that person. If they're not an owner, you can count that $1,923 every week for the full 24-week period. If they're an owner, you can only count it for 10 weeks.
There's several questions about if you choose 24 weeks, can you submit it early? They released that today and said yes. And you can submit it early. There is a couple warnings about that, but you can submit it early, and most likely if you can submit it early, you're going to want to.
Yeah, that's what we're hoping for is that, obviously that when you cap out and you get everything covered within, let's say 13 weeks, that right then we can, fill out the forms, submit the documentation and get this behind us. So then again, we can get back to the normal business of operating our stores and making the correct payroll decisions that we need to make for long term. So there's a question, and we've gotten this a lot. So someone said, if your salary is around 50K, what's the maximum in extra pay, hazardous pay that you can give to that employee? There is no specific guidance on that, but we've talked to several of the banks and gotten the same answer is, just be reasonable. We gave every employee in our stores a bonus for the work that they did because they came in every day, they worked hard and served the customers and risked themselves, and so we gave them bonuses. Now, we didn't get outrageous. We didn't give ourselves bonuses as owners. That's probably not the wisest thing to do, but I think, as long as those bonuses are within reason and something that you might have done in another year where you had a good year and you gave bonuses out, I think it's more than okay to reward your employees for, doing great things. I would not jump overboard, and I definitely would not give yourself large bonuses in this. Can you use the 340EZ if you choose an 8-week cover period? Yes. You have lines on there where you get to choose your period start date and your period end date. Again, I don't see too many scenarios where you'd force yourself into the 8-week period. Because if you can terminate your 24-week period early, then I think most people will just fall into the 24-week, and when they get enough expenses, And you're probably going to want to actually have more than enough expenses in case for some reason they come back and say, well, you don't have proper documentation around this expense or this rent or that, and they disqualify it. I'd rather have plenty of extra expenses to say, okay, well, let me submit this then or resubmit. So make sure you're not, don't go right to the edge and then submit. You know, give yourself a little leeway. Make sure you build up the expenses, the proper expenses you need to get complete forgiveness, and then submit that.
There's a question about how do you apply for forgiveness and where do you do that? You work directly with your bank. Your bank will be giving you instructions on what you need to do there. Again, most of the banks, if any of them, are not accepting these applications yet, and a lot of them aren't asking for the applications for forgiveness yet because they don't know the rules. And so you will be getting communication from your bank, and the bank is who you will submit the forgiveness through.
Yeah, some of these are tricky. Somebody's asking if somebody left and is collecting unemployment, if we report them that they wouldn't come back, will that affect their unemployment? Those are really challenging questions.
Those are challenging, and yeah, maybe not. It depends on what their final ruling is on the FTEs.
But again, for you as an FTE, I mean, you know, that is an allowable exception for you not to have to reduce your FTEs. So my guess is I doubt it, but you definitely, those are such specific questions, they're hard to give a straight up answer. So there's one about husband and wife both work in a pharmacy, but only one owns the business legally. Will the combined pay count as owner salary or just the legal owner? I believe just the legal owner, but again, those are really good questions. You definitely will probably get some more clarification on that here in the next couple weeks. And again, your bank, at least the banks we've talked to, the bank wants you to get forgiveness. So those will be questions that, you know, we'll be able to ask the bank and ask your loan officer that you're working with at the bank to say, so again, it's not like I've got one chance to submit this, and if it's wrong, you know, take the more aggressive approach, you know, and submit you as an owner and cap you as an owner. And if your wife is legitimately working in the store or vice versa, then, you know, submit their wages as if they're a regular employee.
There was a couple other questions in here about that same question, husband and wife, only one of you legally owns. Wife works, also gets contribution for health insurance. Is that deductible?
Again, this is not the tax law, so there are very specific and very controlling rules on the tax law around that type of stuff. This is forgiveness. I would take an aggressive approach and then work with your banker as you submit it. But if you're the only owner, I would only, you know, use your owner, you know, cap your dollars and your insurance as an owner.
But if a relative is not an owner, I mean, I would submit it as if they were a regular employee and let the bank tell you otherwise. But again, the reason your bank, if you've asked them, the reason they're not giving you clear answers on this is because they don't know. And so you will get clarity on this in the next week or two.
So if you do submit that and the bank were to come back and say, no, we're going to disallow this because you're a spouse and we're not going to allow that spousal insurance to count. So that's why you want to make sure you've gone a little beyond the line, right? You've got some extra expenses there to make sure that so you can say, okay, well, I'm going to do another payroll period here.
There was a couple questions in there. Should I only use payroll if I'm going 24 weeks? Well, my only argument with that would be, well, you want to go a little further than what you think you're going to need. So you may want to throw a couple rents in there just to cover, to almost exceed what your forgiveness needs are.
You could go just payroll, because again, you applied for the loan based on basically 10 weeks of payroll in your store. And now you're seeking forgiveness and you've got 24 weeks of not only payroll expenses, but other expenses to get there. So yeah, surely within, probably 12 weeks, 13 weeks, you've got 10 weeks of your prior year payroll covered. You probably have it covered in 10 weeks, but again, go a couple extra periods and make sure you've got more expenses in case anything is disallowed or something's changed that you didn't quite see coming, that you've got more than enough expenses to cover it.
So there's a lot more specific questions in here. Again, we just can't answer every little one. You can reach out to us, also reach out to your IPC rep, and they can, forward questions to us as well. We will do our best to answer them. Also, keep following the news because there is going to be more information released on this in the next 7 to 8 days. And things may change a little bit, and there'll probably be a lot of clarity around, in particular, that full-time equivalent.
Yeah, and hopefully then we can have a third and final segment to this kind of series on this PPP and give you very clear, concise answers on how to go about doing this. And then again, we can get back to running our stores, and hopefully that by going through the PPP process, it's been valuable to you, that it's provided you working capital and helped you both keep your store open and provide the same high level of care and service to the patients that need you now more than ever. And that's what independent pharmacy is all about. So, this has been a rough time, but these dollars are well deserved by the pharmacies that went out and got them, and then continued to stay open and keep those people employed and continue to serve their communities. So, we're happy that so many pharmacies got the money, and we want to make sure that every one of you gets the maximum forgiveness that you can.
So thanks for your time, and we're going to end it there.